Since the last weekend market crash because of this yen carry trade debacle, the market seems to be coming back. Okay, on Tuesday morning, we saw the market seems to be bouncing back to the same level it crashed from on Monday morning. And as I explained in my previous video, that there was some sort of a overblown reaction to that as well. For sure, there was some over leveraged trades that got liquidated because of this yen carry trade unwind, but there was a chain reaction that was triggered because of this, and the other investors followed through that, and that actually created this massive sell-off in the global financial markets. So market is realizing that it was a bit of an overblown reaction, and which is why the market is coming back to its previous levels. But doesn't mean that everything is rainbows and sunshine again. I don't think so. So all those fundamentals which are indicating us towards the recessionary period, they're still there. They're not going away. Like rising unemployment, the delinquencies in the consumer and business segment, the SAM rule, which also triggered the recession, the yield curve, which is also about to be uninverted, all of these things. And then this whole commercial real estate issue that is also putting a lot of holes in the regional bank's balance sheet. All of these things are actually giving you a picture that we are heading towards an economic downturn. That will be a recession, depression, you can call whatever you want, but there has to be some sort of an economic contraction that we are heading into it. Now, we can debate the timing of it. Nobody knows the exact timing, okay, when this is going to happen. Are we already in that recession? Are we heading into it tomorrow, 3 months down the road, 6 months down the road? Nobody can exactly pinpoint that time. But we know that we're approaching towards that kind of a period. Okay. Now, the reason why we haven't hit it yet because of the government fiscal spending. Okay, the government is running massive fiscal deficit in the US, in Canada, in Europe, in UK, which is why we are basically kicking the can down the road. If you remove the fiscal deficit spending, you will see the economy will crash like literally tomorrow. Okay, so we don't know the timing, but we know exactly that we are heading into it. Now, if you look at different recessions like 2008 financial crisis and 2000 dot-com bubble, there are some similarities between today and the dot-com bubble versus the GFC, because GFC was a more US-centric recession. Okay, it was centered around US housing market and the banking system in the US, because the banks had garbage collateral on their balance sheet which nobody was willing to trade for an extra cash. So that was basically started from the US, and it spilled over across other markets as well, but it was US centric. Okay, 2000 bubble was economic recession. It was the earning recession. Okay, it was because of the insane valuations in the stock market for the companies that has some sort of a .com attached to it. Okay, like when the internet was starting to be a thing, everybody was making this narrative: this is going to change the way we work, this is going to change the way we live, right? Internet is going to revolutionize the entire industry. That was a narrative. Okay, and you can see the similar narrative right now with regards to AI. AI is going to change the way we work. AI is going to change the way we live our lives. AI is going to revolutionize the entire industry. That's the narrative. You're seeing it again. Okay, and it happened, right? The internet has changed the way we work completely. In the last 2 decades, we have seen enormous growth. We have seen enormous productivity growth across the world because of the internet. The scalability of the business, it has produced the experience that we are having in terms of consuming the content, delivering the education content, the communication, right? Everything has changed big time. So for sure, it has revolutionized the way we live and work today, but it doesn't justify the valuation we had back then. So I'll give you 2 references. You look at Cisco stock and Intel stock. Okay, you go back all the way to 1999. You can see that the crazy top that both companies has reached, we have never been able to reach that top again after 24 years. Okay, so for sure the internet has changed the way we live our lives, but it did not justify the crazy valuations Intel and Cisco had back then. Okay, so the same thing goes with Nvidia, right? Or other companies who are rallying at the back of the AI bubble. Like, yes, AI will change the way we live our lives. Yes, AI will change the way we work. Okay, our entire lifestyle is going to be changed because of AI. But does it really justify the crazy valuations we have on Nvidia and other tech companies? That's a question you have to answer. So I think it's going to be an economic recession. And my analysis is that I could be wrong, that we have hit the top. Okay, from here, we may be able to move sideways, maybe another spike, but that's it. Okay, because the market is realizing that this is a hype. We're not seeing a lot of earnings growth. Okay, so this whole narrative change that I talked about in previous video, that is coming into realization now. And that recession that we're going to have is going to have a lesser effect on the US side of the things versus the other economies. Like, for example, in Canada, we're going to have a massive impact because of the recession compared to the US. Okay, because we are much more dependent upon the trade, the opportunities, and of course the real estate bubble that we have, which is not going to save us anymore, because we have also hit the peak in the real estate market as well. From here, I think it's either going to go down or stay flat. Okay, even if you cut the rates to 3%, I don't see this is going to stimulate the demand, because we don't have the economic growth. We don't have the growth in the household income. Okay, we don't have the growth in the private sector, which is going to generate jobs and opportunities, which contribute towards the GDP. In the absence of all of this, there is no chance we will be seeing any housing activity in the Canadian market. Could be wrong. This is just my analysis. You let me know what you think about that, and check the links in the description. There's some free stuff available for you. Take a look at that and let me know what you think about that. And I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.